We always spotlight an asset class in this video. Today we're spotlighting U.S. equities. As I said before, they're the strongest in the world. And despite a historic drop of 35%, historic because it happened in such a tight span of time, the recovery has been equally as historic, and we remain 6% from all-time highs. Now, when you have a 35% drawdown and you're 6% from all-time highs, subsequently 6% from all-time highs, one thing is for sure, and that is that you've had a year that has been full of volatility. And I think 7 months in, 2020 has been a year that will be identified with high vol in markets. It'll also be a year identified with some anomalistic behavior in terms of factor expectations. So this graph here shows the performance of year-to-date performance, cumulative total return of the low volatility index, the pure value index, the high dividend index, and as a somewhat of a placeholder benchmark, if you will, the S&P 100. One anomaly that's occurred this year is that the S&P now is over 20% of the S&P 500 is represented in terms of market cap by 5 stocks. And so these 5 FAANG stocks are having their largest influence on this index that they've ever had. And so they're also a part of the S&P 100. So you get a chance to see here the inclusion of 5 stocks in the S&P 100 has disproportionately benefited that index against others. Now, in this case, the others are, at least historically, been considered to be, quote, safer, at least in the equity complex. When you want to put a safer equity portfolio, defensive equity portfolio, you choose low volatility stocks, you often choose value stocks, and you choose high dividend stocks. And this year, we've seen that all of those quote unquote safe or safer choices, actually you had the same amount of drawdown risk and you've recovered less. And so we're not saying that this is something conclusive that you should assume this is the case going forward, but what we are saying is that this is anomalistic behavior and you need to have a consistent, repeatable process in order to navigate through this.